The market has shifted. I'm sure you guys have heard the news is out, right? The market has shifted, and that's a good thing. In today's video, I'm going to go over 4 questions that are the most common questions being asked in today's market. 1, is the housing market going to crash? 2, what's happening with mortgage rates and what's going to happen in the future with mortgage rates? 3, if the economy slows down, if we go into recession, what does that mean for real estate? And 4, the $1 million question, should I buy a home? Stay tuned. I'm going to answer those 4 questions ahead. All right, Matt, the mortgage guy, residential mortgage broker, doing mortgages across the country, 1 to 4 unit residential mortgages. If you want to connect me and my team, go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. We're more than happy to. Before we jump into it and I answer those questions I discussed before, a mortgage joke, right? You guys love my jokes. Let me know if you do or if I should quit this, right? I thought people would flock to my bank if I offered 0% mortgages, but there was literally no interest. All right, quit the jokes, Mateo. On with the show. So first and foremost, is the housing market going to crash? And there's no shortage of fear porn out there. There's no shortage of 50, 60% declines. Somehow, some way, people can take stats and make them say whatever they want. 1.7 month over month decrease in a month of the year where there's always decreases in real estate prices. Like somehow that gets extrapolated and we're going to go down 60%, right? I will admit that housing demand, mortgage demand has come down quite a bit. Will housing see a 5 to 10% correction in the next 12 months? Probably. It's likely, right? But will it fall off a cliff and go down 40, 50%? Some people are asking me if it's going to go down 75%. There's no frigging chance, right? So big banks, players like Morgan Stanley got a 1.2 trillion cash. These guys keep their finger on the pulse, right? Morgan Stanley says their forecast for 2023's home prices come down 3%. Moody's says 5 to 10%. Wells Fargo says down 5.5%. Goldman Sachs agrees with Moody's, down 5 to 10%, right? I think if I were to take a guess and you ask me for a crystal ball, 2023 and 24 are going to be pretty flat markets where you're not going to see big gains and you're not going to see big losses either. Truthfully, 10% down is more likely than 10% up, but I think 20 to 30% down, like a lot of people think has to happen, doesn't necessarily. I think that like demand is constricted, supply is constricted. There's still people that need to sell and still people that need to buy, and people always move. If rates come down to 5.5 or 5% as inflation comes down, we could see demand pick up, right? And without a ton of supply, there's really no way to see a 20 to 30% decline in prices. Just my 2 cents. On with the show. What's happening with mortgage rates now and in the future? And I think that knowing that we're headed into a recession and knowing that we can look back historically and say what happened to interest rates during recessions, we can take some guesses. 1980 recession, rates go from 16 to 11.75. 81, 82, 18 to 13. 90s recession, 11 to 8.75. Early 2000s, 7 3/8 to 6.75. Great recession of 08, 07, 09, from 6 to 4.875. And then the COVID-19 recession, 3.75 to 2.75. So 6 recessions, 6 decreases in mortgage rates. I think you've got that. And you've also got the fact that more than likely in the next 12 months, inflation comes down, and with inflation follows rates. That's another historical trend you can look at. Like as inflation comes down, rates will also come down. So question number 3, if the economy slows down, if we enter a recession, what does that mean for real estate? Talked about what it means for rates, right? another thing that we can historically look at, and we can look at real estate during the last 6 recessions. Recession doesn't equal housing crisis, doesn't equal home prices crumbling. In 80, home prices up 6.1%. In 81, up 3.5%. 1991, down 1.9%. 2001, up 6.6. 2008, the outlier. And you know why? Because this was a recession caused by a housing crash, caused by irrational lending behavior, where not only were the loan products predatory and set up for failure, anybody could get them. Lending standards were non-existent. If you look at credit availability and what it takes to get a mortgage loan these days, it's at historic lows. It's hard to get a mortgage. You need to be well qualified. Back in 2008, it was the exact opposite. Pulse, ability to sign, done. And sometimes you didn't have to sign. You had a shady loan officer signing that thing for you. That's a whole nother story, right? Down 19.7% in 2008. 2020, up 6%. So recession doesn't equal housing crisis. You know, history tells us that lower mortgage rates, which pushes demand back up, generally pushes prices. I think that like it'll balance things, right? Interest rates come down, demand comes up, but it's not going to be a 2020 or 2021 market. None of us hope that, right? It's going to be a market that feels slower, like we're currently in right now, but home prices will be relatively stable, right? One thing will forever remain the same. People always need a place to call home. Question number 4, the $1 million question. Should I wait to buy a home? And there's a couple things to think about. Buying a home in 2022 or 2023 is easier than it was in 20 or 21. When you're talking about getting your offer accepted, when you're talking about getting seller concessions, when you're talking about flexibility with not just sellers, but financing and the loans you can use, FHA loans work, down payment assistance loans work, writing a longer contract, getting inspection, appraisal contingencies in the contract, all that stuff works. The thing that is harder is the cost of capital and the fact that your mortgage payment is higher. I get it, right? It's less affordable because the cost of capital, the interest rates are higher, and you've got a $3,300 mortgage attached to a house where that same house had a $2,700 mortgage attached to it just 6 months ago. I get it, right? But the true determiner of if you are going to buy a home is not timing the market, this rate, this price at this point in time. It's when you are in a position to buy, you're financially stable, you're financially ready, you've got a payment that's comfortable, that makes sense, that you qualify for, then you go out. And if the market is like it is today, while you're shopping, you get to take your time, you get to look at a few properties, you get to submit an offer, you get to ask for the seller to maybe pay some of your closing costs. That's a better buying experience, albeit at a higher cost of capital. But truly, you know, it's going to be a market where a lot of people are going to be able to win. So that's my 2 cents. When you're ready, not when the market's ready. You know, with inflation being as high as it is, a lot of people might point to like, should I buy a house with inflation this high? I just read this blog, really good article, you know, that pointed out the fact that real estate's like the best hedge against inflation. Meaning, like, if we see higher inflation than the norm and it's 3-4% per year, like one of the things that people point to real estate and bag on it for, that's been a word I haven't used in a while, bagging on real estate, saying like, oh, it only outpaces inflation by a point or two. Well, great. Over a 20-year period, 3-4% appreciation every year, only outpacing the appreciation, only outpacing inflation by a couple points. You still gain $300,000 in wealth on your home, right? So real estate is that hedge. It's tangible asset. When inflation is present in the market, right? Like prices rise, property values rise. You want to be on the right side of that. You don't want to be the one who's renting a home and landlords are continuing to raise your rent because they can, because rent prices increase. You want to be stuck in a 30-year fixed loan that doesn't change unless you get an opportunity to refinance it, lower it, while that continues to appreciate. So my 2 cents, take it for what it's worth. You want to connect with me and my team, greatmortgagebroker.com. Reach out to us. We're more than happy to help. We're primed. We're ready. We've got a team of people that are ready to educate you, whether you're ready to buy or not. Get yourself educated, get yourself pre-approved, know what you can afford, know what the monthly payment looks like on the price point you're looking at. Get yourself educated. You're going to be empowered through that education, whether you buy this month, next year, or never, right? Go get yourself that education. Greatmortgagebroker.com. Reach out. And until next time, we gonna see. Let me know about those jokes. Let me know if I should keep the jokes going. It's fun. A little something, a little flavor, right? All right. Take care, guys.